Welcome back, everybody. I hope you're all having a great start to your holiday season. Today, I thought it would be a great idea to check out Adobe since they just released their quarterly earnings today for Q4 2023. And this stock has really been one of the darlings of Wall Street. It is almost always trading at a very high premium, so I thought now would be an excellent time, given the way the stock is reacting following earnings, to check it out and see if this is a potential investment. And so right now we are sitting at the company's investor relations website and I'm at the about page. For some reason, Adobe makes you give them your email and set up a password and an account with Adobe in order to access their investor relations. So that's a little too much work for me. We're not going to do that. So instead, let's just do a quick overview of the company. So in case you're not familiar, you can get an idea of what Adobe is and what kind of products it sells. So to start, Adobe is all about digital experiences, and they've been a company for over 40 years. And they provide lots of software that allows people to imagine, create, and bring any digital experience to life. Now, right here, we have their four kind of core products. Each of these can be broken down further, but on the left we have Adobe Creative Cloud, which contains like their Photoshop, their Illustrator, their Lightroom, all these different programs that we're probably very familiar with. Photoshop, of course, to edit photos. Illustrator to create things like logos or comics or designs. Next is the Adobe Document Cloud, which is a PDF reader, allows people to open different documents, create documents, edit those documents, lock documents. There's so many things you can do with PDFs and different types of documents in that. Then they have their Experience Cloud, which is aimed at giving companies the ability to deliver better customer experiences, better user experiences. And then finally, Adobe Express, which is their template web and mobile app, which allows people to create content in a kind of lightweight, easy to use, but not as complex sort of fashion as compared to their Creative Cloud product. And finally, what I wanted to touch on really quick is Adobe and how they are moving into AI. I will speak about this at the end, but AI is kind of this thing that everybody is afraid is going to destroy Adobe's business because Adobe is about creating different things, being creative. And if AI can just create it for you in the click of a button, then why are people going to waste their time on Adobe, right? So Adobe's trying to keep with the times, keep their product as updated as possible. So they have a few different options that use AI in different ways. First is their Adobe Sensei, which is more focused on collaboration and allowing customers to work and build together. Then there's Adobe Firefly, which aims to allow people to create photos on the fly by requesting a prompt, and then the Firefly AI will create an image for them. And the whole point of this is that Adobe wants to allow people to easily generate high quality images that are designed to be safe for commercial use. So, no more worrying about, can I use this to make money or not? You can just create your own image that is only for you, and you don't have to worry about licensing that image. And then there's the Adobe Sensei Gen AI, which aims to bring generative AI into their Adobe Experience Cloud in order to create a more productive system for businesses to market, as well as to create customer experience workflows that are just far simpler, far more user-friendly, and in other words, just making the business's day-to-day and the kind of customer interaction with that business easier. And so now moving into their earnings report, we can see that on the day that I'm recording this Wednesday, Adobe did beat their targets for their fiscal fourth quarter, but disappointed in their outlook, and that is why the company's stock is currently falling. As I record this, the company is down about 5 to 5.5% after hours, and I think it's going to be very interesting to follow Adobe as it trades over the next couple days to see how Wall Street's reaction follows through. They did earn an adjusted $4.27 a share versus an expectation of $4.13 a share. And Adobe also beat on their top line estimates of revenue, posting a $5.05 billion revenue number versus what Wall Street expected to be at $5.01 billion. And so on a year over year basis, Adobe's earnings rose 19% and their sales increased by 12%. And so I find it very, very incredible that a company that is still able to grow like this just lost 5% because as we'll see, there are some excellent financial numbers here with Adobe. And to take a look at their fiscal 2024 forecast that has caused this drop in the stock, Adobe is forecasted an earnings of $17.80 per share, which is up 11% from this year, as well as sales of $21.4 billion next year, which would be up 10% from this year. Now, in my personal opinion, it sounds like Wall Street's being a bit nitpicky because analysts were expecting $18 a share on sales of $21.73 billion. So yes, those expectations were a little higher than Adobe ended up posting, but not that much higher. I mean, 20 cents on an $18 per share earnings is very, very little. So honestly, I'm not sure if Wall Street is overreacting to this news or if Adobe had just run up way too far and it was only trading at valuations that were allowed to be sustainable if the company blew away expectations for 2024. So as always, I would like to humbly ask that you please hit that like button and subscribe to my channel. Both of those actions are completely free and it really means a lot to me as a small YouTuber. And if you're looking for extra credit, please leave a comment down below letting me know what you think of Adobe or letting me know if there's other stocks that you would like to see analyzed. Thank you so much everyone for your view, and let's get into the numbers. Revenue has grown at an exceptional rate, over 20% per year for the last 5 years. And while that number is slowing down a little bit, we're still looking at about 10% year over year growth. EBITDA has grown at almost 22% year over year, though it has slowed down a little bit more than revenue in the last few years. And Adobe's operating earnings have grown by almost 24% per year, and this number does not show any signs of slowing down, which is really, really great. Gross margins are stable at an incredible 85 to 88%, and honestly, it does not get much better than this, so I cannot fault them for not expanding their margins any further than that. The company's operating margins have fluctuated a little bit more between 29% and 37%, but these are still really great margins, and it's currently hovering at about 34%, so right in the middle of that historical range. Return on assets also look great and have been slowly improving over time, currently sitting at about 17.5%. Adobe has been consistently buying back their shares to the tune of almost 2% of shares outstanding every year for the last 5 years. Their cash and short-term investments have also exploded by over 23% per year and are currently sitting at over $7.5 billion. Compare that to their long-term debt, which has consistently gone down and is sitting at just over $3.5 billion. Meaning Adobe could pay back all of its debt and still keep half of its cash and short-term investments. The company's interest expenses have hovered between $50 million and $100 million, which is essentially nothing for this company. And free cash flow has continued to expand super rapidly at over 25% per year. On a per share basis, this free cash flow does grow a little bit slower, but I don't think any shareholders are complaining at this number still being over 20% per year in growth. And so moving to the PE chart, we can see that the company's average PE is 35.76 over the last 5 years. And that is represented by this bold red line that we see in the middle of the graph. Plotted on this black line is the weekly closing PE of Adobe since 2018, which currently sits at 38.45. The gap between its current PE and its average PE represents the value, and we can see that currently, as of yesterday's close, Adobe is approximately 7.5% overvalued on a price to earnings basis. Given that the company's stock has dropped about 5% as I'm recording this video overnight, I would say it's safe to say that the company is currently sitting at a nearly fair value, almost exactly on its average 5-year PE. And zooming on over to the value chart, we can see that because Adobe has grown at approximately 24% per year for the last 5 years, its current fair value price to earnings ratio is at 24, and that is represented by this bold purple line that we see here. Using 2023 earnings numbers, we can see that the fair value of Adobe that I've calculated is approximately $380, compared to a closing price most recently in the upper $600 per share. So as you can probably see, that is quite a premium over even Adobe's already elevated premium price to earnings ratio. The company's projected earnings CAGR over the next 5 years is almost 15% per year. So we can see that if we use a current fair value PE of 24, the company's fair value in 2026 would be approximately $575, which is still below its current trading price. On top of that, for any projected compound annual growth rate below 15% per year, I prefer to use a fair value PE going forward of 15. And when I change that, we can see a drastic reduction in the price or in the value of Adobe's stock. My calculation is that the stock is worth only $240 per share, and by the end of 2026, it would be worth approximately $360 a share. Now, because the company is such an excellent company and it has a huge economic moat, very great financials, I do think that the fair value PE of 24 is probably a little bit more fair in this case. But even using a higher PE as its fair value, we can see that Adobe is probably overvalued currently. And even if we include the 5% drop that's currently happening after hours, the stock looks overvalued. So for my final thoughts, what I really, really love about Adobe is that they control the creative economy currently. They have so many products that work well in so many different industries, and basically anything you can do on a computer to be creative, maybe outside of like music production, can be done by Adobe software. And this company has really carved a strong economic moat that has kept out all of the competition for a very long time. Secondly, Adobe has an exceptional financial history. I mean, it is going to be very hard to find any other company on the planet that has replicated the consistency and the excellent like leverage ratios, the amount of, cash they hold versus their debt, all of that is just incredible. And every single financial metric continues to look like it's going to improve in the future. So Adobe really does have a fortress balance sheet. And as an investor, you can really, really, invest with confidence and know that this company is going to be safe for a while. And third, as a software company, they really don't have too many assets they have to worry about. There's not factories to maintain. They don't do any sort of like shipping across the country. They just create a software product and they release it to the public, and then they make these updates. So they have very few assets that they have to worry about, and that leads to excellent margins that tend to hold up over time. And for the cons of investing, there's really only one major thing for me to say, and that's that the stock is very, very highly valued. I do believe that incredibly strong companies should be expected to trade at a premium value. But I think in this case, even a company as strong as Adobe probably doesn't deserve to be trading at 35 to 40 times its adjusted operating earnings. For just about any company out there, that's just too high. And so that would be the one thing that keeps me on the sidelines for this company, is just the fact that I don't think it's a good deal right now. And second, I touched on the fact that Adobe is working to build AI into its programs, but there is a large AI threat, especially with different AI models that create media. Like there's AI that can create music, there's AI that can create images, there's AI that can, create logos for you, all sorts of stuff. And so there's a fear that AI and some other companies' AI is going to replace Adobe and the various different software programs that they have. For me personally, I think this fear is a little bit overblown, but it is a fear that people have, and so that is why I have included it, and I thought it was important to at least make you guys aware of this. So with those final thoughts, I do want to say that I think Adobe is an amazing company. I love their products. I've used many of their products. I absolutely love them all. I absolutely love the financial situation of the company. I love the past performance of the stock as well as the company, and I love the future potential of especially the company. I'm not sure I love the future potential of the stock today, given the high values that it's trading at. So for me personally, I do not see this as the right time to invest in Adobe, although if Adobe was to fall in value somewhat significantly, I would absolutely love to buy this stock. Of course, this is not financial advice, so please do as you like. Adobe is great, and if you choose to invest in it today, that is your choice, and I do not want to stop you from doing that. My goal, as always, is just to look at the numbers and see what they tell me. So with that, I hope you enjoyed the video. One last time, please like the video and subscribe to my channel. It means a lot to me. And if you want to leave a comment about your thoughts of Adobe or any other stock in the stock market, I would greatly appreciate it, and I would love to have a conversation with you. So with that, I hope you have a wonderful day, and I will see you next time.